This is the video you have all been waiting for. My actual stock portfolio and the things I actually invest in. It's been a long time coming. I've had a lot of people ask, what do you invest in? Well, I am a huge believer in low-cost index funds, and the majority of my money, over 90%, is in that. I think it's really important to be candid and, I share everything else. I've been honestly a little bit nervous, just admitting that I even invest in individual stocks. I think that's very taboo for somebody who's a purist financial independence, retire early person. They're always low cost index fund, minimalism. But you know what? You gotta have a little bit of fun too. It's just creating boundaries for that and just knowing where you're comfortable. I wanted to go deeper into my actual holdings and how I think about my percentages, and I'll even show you my spreadsheet for how I rebalance everything at the end. If you're new here, I'm Katie, a girl on FIRE, and FIRE stands for Financial Independence Retire Early. I am on a journey to retire early at 35, and I'm bringing you along for the adventure. So if you too are striving to become work optional, be sure to like this video so we can spread the fire, subscribe to my channel, and hit the notification bell so you know when the next video drops. And let's talk money, honey. So this site is called Personal Capital, and I love Personal Capital. And this right here is my actual dashboard. You can see over on the left, my current net worth. I do not hold any real estate, nor do I really have plans in the near future to buy into the real estate market. I currently live in California, so the cost of entry is just too high, and it just doesn't really make sense for where I am in my life right now. Once I reach FIRE at 35, and if I end up having a life partner who is also on the same FIRE goals as me after we both reach financial independence, or if I'm single still on my own and I want to enter the real estate market, then, any surplus of money after I reach financial independence, I'll start putting and saving towards a house down payment to be able to buy a house, in California or whatever state I choose to, call home. So that being said, I hold cash right now, and I'm actually targeting an additional $10,000 by March of 2022 to be able to have the option to take a year off of work and try out early retirement before I actually go full send into early retirement. I'm gonna go into detail later, and I will definitely share all my plans to that corporate sabbatical journey of mine. But I kind of have targeted that $26,000 to be my emergency fund and all of my living expenses for that year. My Ally Bank, that's my high yield savings account. I also still have my Bank of America checking account, which I just use to pay off my Bank of America Visa. It's just easiest. So I keep kind of the minimum, close to $2,000 in there at any time. And then Wealthfront is my actual checking account that I use where all my direct deposits go. And from there, I can pay bills or pay my credit cards off, things like that get taken out of my checking. But I really like Wealthfront for my checking account because it's kind of a high yield savings account. I think the APY is 0.1%, so still better than Bank of America's 0.01. And that's why I like keeping just even my main checking there. Personal Capital is how I track my net worth on the day-to-day. It aggregates everything, and it's just a lot easier to see rather than logging in to all my accounts. I will also leave my Personal Capital link below. You get $20 Amazon gift card if you guys decide to sign up. Really, it's free. You just ignore their annoying pop-up that says do you want to talk to an investment advisor? I always say no. Always say no. Ignore. It's so great for tracking your net worth and all the historical data on your accounts. So before we dive into my actual brokerage, I want to show you a graph from my Rebalance calculator. So if you look at this, here's my current allocation. So 8.4% fund money, 1.5% bonds, 10.4% international index funds, and then 79.7% in US stock index funds. Really over 90% between my bond, international, and US stock index funds is where my money at. And again, only 8% is what I put in fund money or individual equities or just regular stocks. But getting into my actual investment portfolio holdings, I'm just gonna go over to the Schwab app. So This is my taxable brokerage, which I currently contribute $4,000 a month. After I get paid, a paycheck hits, and then I send money into this account. And then whatever kind of other income I have for the month gets sent into this. So if I'm freelancing, if I do a collaboration, things like that, all of those paychecks get sent here. So you can see equities, I hold Amazon, Apple, Etsy, Target, and Walmart. In like 2018 is kind of really when I started investing, and Deb would just say, you know, pick companies that you like. So these are the ones that I picked. And I did add on like Etsy recently after I opened an Etsy shop. I thought, you know what, heck, like I'm opening an Etsy shop and I believe in this company, and I believe more people are going to become entrepreneurial and try to sell more things that they make themselves on Etsy. Become their own small business owner. So that's like why I picked Etsy. I really don't do any research when I pick these stocks. I'm just like, yeah, I like it. I use it. I know the company. That's about as much thought that goes into that. ETFs, which are a type of index funds, I hold ARK, QQQ, SCHF, SCHB, and SCHD. I got caught up in the whole like ARK, QQQ tech index funds that are way overpriced. Those are actually the only thing in my portfolio that I think have gone down since I bought them. That and crypto, which we'll get to that later. I probably shouldn't have bought into the hype. This is how you get burned, but this is, yeah, what I'm holding. And then as far as mutual funds go, I hold SWPPX, SWYJX, SWNTX, and SWTSX. I have a target date 2055 index funds, and for the most part, I'm trying to divest out of target date index funds because I am trying to reach fire. I just feel like the allocations are a little bit too conservative. They hold too much bonds, and I prefer to self-manage my index fund allocation percentage myself rather than have it like slowly drift towards bonds. I am personally trying to even move out of bonds entirely because that will give me a higher percent chance of my portfolio never failing me in early retirement. And early retirement now, Big Earn has a really good graph on this. If you look at this graph, it basically is saying that the more stocks you are holding and the less bonds, the higher percent chance you will be in this green area and your portfolio will never fail you. So I'm trying to divest out of my target date index funds and my bond index funds and move into just total stock market index funds. If I decide to take a year off, I will probably sell these stocks in 2022 because my income will be like a lot lower, hopefully in the $30,000 to $50,000 range. Whereas this year I'm on track to make six figures. I'll be in a lower tax bracket for my long-term capital gains when I decide to move out of these positions. Roth IRAs are great because, you know, I was holding a target date fund in there, but since you aren't penalized for trading at all inside of your Roth IRA because you don't get taxed on capital gains until you start withdrawing, you can trade kind of freely in here and not worry about any capital gains at all. So I divested from my target date index fund, SWYJX, and I think I threw it into the SWTSX. This is just like a brain dump of my portfolio. I hope this is helpful. Okay, in here I hold Berkshire B, Facebook, J&J, Tesla, and Walmart. Yeah, just like random small amounts. And then for mutual funds, I own Schwab's International Index Fund, the S&P 500, total US stock market, and then the US Bond Index Fund. I'm going to sell that SwagX. I really should. But I've lost money overall. Like it's down 1.43% since I bought it. So trying to like hold it to where at least I feel like I'm not locking in those losses, even though it's like a pretty negligible amount. The value is only like $1,200. That's my Roth IRA. My SEP IRA, which I just created in 2020 to put my 2019 contribution towards, I invested that all in SWTSX. I will probably talk to my CPA the following year to see how much I can contribute to my SEP IRA based on my freelance income that I've made for 2020. And then my traditional rollover IRA is also SWTSX. Really simple. So I keep this traditional rollover IRA separate just in case I ever want to roll over my traditional IRA back into my 401k. It's best to keep it like separate because if you start combining it all into a single traditional IRA account, then it's really hard to track like what amount of money came from your 401k initially. So it's best to keep it separate. And then like if I have to do a backdoor Roth IRA, which I will probably have to eventually, since I anticipate one day I'll be making over the $139,000 income limit as a single person. Then I'll have to do a backdoor Roth IRA. So put $6,000 into traditional and just characterize it and put it into a Roth IRA. But I don't want to have it intermingle with this old rollover traditional. Okay, so moving on here, I'm going to go to my other brokerage account over at Fidelity. And this is my work 401k. And pretty limited options. So I just picked what was best for me at that time. Okay, so I have FXAIX, which is their S&P 500 index fund, and their international index fund, and their bond index fund. So I don't think you can like really trade around. You can only like change your contributions and the different percentages. So I'm kind of stuck with these. I stopped actually, I think for 2021. I think I'm only contributing to the S&P 500 one. I really keep it simple and just try not to think about it. And then in my HSA, I hold the FSKAX, Fidelity's Total US Stock Market Index Fund, and then their Total International Index Fund, FTIHX. Those are the brokerages that I actually manage myself. I also have $100 in Bitcoin in Coinbase. I literally bought it at the peak of the market. I put in $100 and it's gone down to $70. So maybe even less. Maybe it's $60 now. I really don't even look at it. And this is how I got burned by crypto. So I really don't count that money. I just, whatever, it's $70 and I pretend it's not there. And then also I have a couple of small individual equities at Public. And if you guys haven't checked out Public, it's a social trading app for like financial people to share what they're trading and buying and what they're holding and kind of talk amongst each other, which obviously that's right up my field. So if you guys want a free stock from Public worth up to $40, be sure to check out my link below. I use them. If you sign up, they randomly will email you and like send you a free invest cap. So there's a chance you could get that if you also sign up to get a Public account. And in there, I've just chosen random stocks that like Google. I think I hold Alphabet or Google, and then Amazon, Shopify. That is really just like small money for me. And I also just really don't even include that. All right, it's like 1:40 a.m. on a Saturday, and I just exported a version of this video, and then I went to go take a shower. And then in the shower, of course, I had a shower thought. It always happens. And I realized I completely forgot to talk about my Wealthfront brokerage account just because it automatically invests everything for me. I don't actually pick and choose which funds I'm invested in. Yeah, you basically just take a quiz, which I took a quiz years ago at this point, and it assesses your risk tolerance for like when the stock market goes up and down. Like if it goes down, would you pull all of your assets out? Would you take all your money out? And based on that, it decides which funds to put your money in, so you don't like feel those fluctuations as much. And I self-manage all of my portfolio now through Schwab, my Schwab accounts mostly. So that is why I like didn't speak to what is holding, because there are so many, mostly all low-cost index funds. Yeah, I do love Wealthfront. I love Wealthfront for new investors, but I completely forgot to talk about it. So yeah, in case you're wondering, which you probably weren't, but I felt like I had to add this. So this is my rebalance calculator. I put in all my holdings, categorize it. It pulls that data from the other sheet, the holdings sheet. So I can see my current allocation. And then my target one is 80% US stocks, 10% international stocks. I'm trying to get out of bonds, so 0% in bonds. Fund money, individual equities, 10%. Obviously with individual equities, if the company for whatever reason goes bankrupt, goes out of business, that could all go to zero. And what percentage of your portfolio are you comfortable with having that risk and holding that risk? Right now, 10%-ish is a good number for me, and alternative 0%. The category of alternative, I feel like is like for crypto or gold, like weird alternative stuff. I don't really hold any of that. So I guess I could put my crypto, but I don't. I'm always like tracking if I have money to deposit, where does it need to go to keep it in balance? But then also I'm due to do a full rebalance, probably honestly, right now is a good time since we're halfway through the year, but I'm almost fully in balance. It actually says to like add more into fund money, but I probably won't do that. I'll probably just throw more SWTSX because that's my main man, my go-to. So yeah, that's a look into my portfolio. If you guys enjoyed that, be sure to like this video, share it, share all your friends, binge watch all these videos, subscribe to Millennial Money Honey, hit the notification bell so you know when my next video drops, and let's retire early together.